Trump's trade deals are coming in and they are obscenely in America's favor at last. Last week, Donald Trump announced a pair of trade deals with Vietnam and Indonesia, which are our 6th largest and 16th largest importers. Now, these countries send nearly $200 billion a year to the U.S. and import just $23 billion in return, so barely over a tenth. And both countries, but especially Vietnam, have become offshore manufacturing platforms for Chinese companies dodging American tariffs. To the point, nearly one-third of Vietnam's workforce is producing goods for export to the U.S., often for Chinese bosses. One-third is a lot of leverage, and Trump is using it. So the new deal with Vietnam lays on permanent tariffs of 20% with a 40% tariff for trans-shipped goods from China. Meanwhile, Vietnam is removing all tariffs on American goods. The deal with Indonesia is almost identical, suggesting this is Trump's new baseline. So Indonesia gets a permanent 19% tariff on Indonesian exports to the U.S. and also 40% on Chinese transshipments, and also zero tariffs on American goods. Indonesia even threw in a sweetener promising to buy $25 billion in U.S. goods, including energy, farm products, and 50 Boeing 777s. Now, these are lopsided deals, which make sense considering they need our market a lot more than we need them. 30% of the workforce is basically an economic colony. The real mystery being why American presidents spent 80 years throwing away that leverage, instead seeking reciprocal deals with midgets who wouldn't even live up to them. The Indonesia deal is particularly interesting because while Trump had Vietnam by the balls with 30% of GDP, Indonesia's exports are 15 times smaller. Yet, they took a deal that's almost as bad, suggesting Trump is going to be able to nail down a lot more of these deals. Note, every deal Trump cuts puts pressure on the holdouts, because if, say, Korea is facing 40% tariffs while Vietnam's at 20%, they are priced out. It is a giant sucking sound. This is especially true for China, who is the main competitor to Vietnam. So far, China has been holding out, praying tariff inflation erodes Trump's popularity. But this is not happening. 4 months in, we're looking at something like 0.1% in tariff inflation, meaning the pressure is now growing as Chinese factories fall silent and potentially millions of workers face layoffs. Interestingly, China had been threatening other countries that dared to make a deal with Trump, but now their top competitor and neighbor, Vietnam, has made a deal. There is now a very enticing path for Chinese manufacturers to close up shop and move to Saigon, where, after all, wages are 4 times lower than China. So what's next? Brought to you by I Trust Capital. Trump is finally leveraging America's dominance as an export market instead of playing sucker at every table. Expect more deals in export-dependent countries from Thailand and Korea to Morocco and Mexico. As for China, President Xi's painted himself into a corner. There are already rumors of factions in the party edging him out over the trade war, and Xi has responded by being much more conciliatory than last trade war in 2018. The fact that America is seeing almost no inflation while China is seeing thousands of shuttered factories means time is not on China's side. They have to come to the table, perhaps with a similarly lopsided deal that opens up to American energy, farm products, and even cars and manufacturers. Okay, we'll be watching. See you next time.